Hey, and we're back finally. After a nice break, we're back with some of our lives again. Welcome to the Mohawk Forex Scalping team. And it's good to be back here in kind of sunny London today. And yeah, we're geared up because obviously next week is going to be NFP week. So we thought we'd just do a pre-NFP live stream focusing on the upcoming open and the ISM PMI news that's going to be popping up 15 minutes to 30 minutes after the opening. See here we've got the global services and composite coming up 50 minutes after the open, and then we've got the all-important ISM, which more than ever has become now a key data indicator and a big market mover, obviously linked to inflation, potential interest rate rises, etc. All these kind of fundamental big data points are now more relevant than they've ever been, and great for us who are fundamental momentum traders to cash in on the movement once we get the result. So yeah, we've got about 45 minutes until the open, and then we'll dip in on the PMIs, and then 50 minutes later we'll dip in on the ISM, and then you've got some Fed speeches later on to watch out for as well, and that's the end of the trading week. So but hopefully we'll be back doing more live streams now, and a build up to the NFP week today. So go to the website www.mohawkforex.com. obviously if you want information on how to join our VIP group and learn the art of true scalping. So we're going to be focusing on a 5-minute and 1-minute chart as always, and taking trades in and out as we see entries pop up. So we're using the CCI, the TDI, and our favourite is the count the channels, which is sort of Bollinger Bands. And to get the settings, the information how to use this, if you like what we do, then obviously you can just join our group, but we'll show you how it's done. We've got our own set of support and resistance levels that pop up on the chart as well, built into the system, and so to give us all the tools we need. Like I say, when you're trading fundamentals and momentum driven, you can use a range of different indicators. This is just my personal preference at the moment. We switch it up, we use RSI, like I say, we use Bollinger Bands, you know, there's lots of different things we use, super trend, whatever. They all act pretty much in the same way. You've just got to have the strategy that works for you, and then have the indicators to help back up your kind of analysis, and that's what we do. We don't just dip in on the indicators, we kind of have got an idea where we're going to be going in the first place before we use them. Like I say, I like to combine them together. We've got a 1-minute on one side and a 5-minute as well, and settings are the same for both. They work really well and just give me an idea of where there might be potential reversals. The thing I'm looking at, which is US 30 at the moment. You can see, same as DAX, we've had a nice bullish run here since London Open, with a nice breakout candle that broke through our 50 moving average. We had a retest and then away it went, and that's it. And then we had a little push up again just after lunchtime, and the market is waiting now for the ISM and the PMIs. Now it could be the fact that the markets have priced in the moves, so instead of getting more pushes to the upside, we could see some big drops. So that's what I'm looking at, potential sells coming as we've had this big bull run, a couple of smaller pullbacks but nothing major. So we'll keep an eye on that. But of course all depends on the data. If I suspect these results are weaker than what is predicted, i.e. less than 50 and maybe less than 54, then we might see a further improvement, because that means the markets are slowing down and the Fed is going to talk down, or interest rate rises, where, to be honest with you, most people are talking up of another 0.5% rate rise in the US, and obviously them not pivoting on the rates until 2024 now. So the markets are kind of priced that in. Now if we do get these higher, which means we're still strong on global services and we're still strong on non-manufacturing and employment figures and the PMI, then we could see some drops, and that's what I'm waiting to see. US 30, we can have a look at NAS as well. And again, same. They've all, everything's pretty much, you just have to take the one you fancy the look of, and all of them had this breakout candle at 8 AM London Open, and I've done the same thing, a quick retest, and away we've gone. A couple of minor pullbacks, but nothing major yet. So we could end up going back to just below where we opened, kind of in a bit of a range now between that 12,408 and 12,09 level on NAS. So that's one to watch out for if you want to trade NAS. And let's have a quick look at gold. Gold again, exactly the same, had that breakout candle here, look, again it already kind of broken above our 50, retested, and away we went. We broke out of our resistance level, come back and retested it a couple of times. And a US 30, which we're focusing on, where we're looking at this level of resistance here at 33054. So we're going to wait for, what I like to see is the TDI in the correct zone. At the moment it's in a buy zone, not a sell zone, and we like to see this CCI pulling back into the channel. So at the moment what this tells me, you know, one's saying we're buying and one's saying we're selling, so we're kind of just going to go left for a bit, which is what you expect before the open. And now we've got a new, the resistance level is just here, look, as you can see. So are we going to get some market manipulation, everyone looking to buy with all the news, and then we have a drop back down to this level here, which is 3300 on US 30. And then we could end up coming back down to, like I say, just above that breakout candle. I don't think we're going to recoup all this, but again, it all depends on the news result. So everyone's buying at the moment, pushing everything up, and probably expecting it to go even higher. And as you can see, if we just go left, look, we can see on the 5 minute where we had that nice rejection, and we've just kind of broke above it. Whether it's a false breakout or not, I'm not taking a trade. If I was going to take a trade on that buy, which I was just making a coffee at the time, our CCI pops in on here, and then we'll wait for a cross up on the TDI, which would have been there, and we would have held that, and we could have got a few pips on it. Stop loss would be below our support zone here. So we're just going to hang on for the open and see. And if anyone wants to join in, ask questions, then obviously just drop us a message.
Doing business with those trying to evade sanctions on Russia. The Commerce Department says businesses should watch for transshipment.
We've got Bloomberg as well. We'll just turn that up in the background, keep an eye on the markets as we're getting ready to trade.
China, Macau, and countries close to Russia, such as Turkey and Armenia.
If we break above this level, we've got a chance of going up higher. Our next level here, look, is 33137 zone, 38. So heavy resistance, like a 4 hour resistance zone, which we're going to go all the way back to here. Look, you can see, go left, look, this was on the 24th of Feb, so a while ago now. That was the last time this key level was reached. As you can see, there's the level set. That's our zone we're looking at. So I can actually draw a box around this.
Powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
That's a kind of area of heavy resistance. If we did go higher, we'll look to pull back from there. But as I zoom in more, I'm just saying, I'm thinking we're going to get some kind of pullback.
So what's the best investment advice you've ever given?
Trade view, futures rise, yes, retreats. The yields, obviously, were high up, bonds were down, edge up as yields retreat. So it's all looking very bullish at the moment, like I say, but we know how the market works with the manipulation, especially on the 1 minute and 5 minute time frame. So if we look on 1 minute, you can see We're waiting for this to creep back in the zone across on the TDI, and we're looking for a sell then. A quick sell on US 30. It's looking pretty good. Let's just load up. We're on IC markets, our chosen broker. We're going to be trading. Going to go in on 5 on this. Let's just see.
Not keeping, but people have conviction, or they invest for the, if they invest for the right reasons, just keep at it.
Going to get across in a minute, maybe on the TDI. We'll just see if this bounces off our support. Got a blue zone forming, which is always pretty good. Looks like that's sticking.
From business's most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Nice rejection, push down. Looking on the 1 minute here.
Bloomberg Television and Radio. From the world of politics to the world of business. Balance of power with David.
Talking about 8 pips maybe. Let's just wait and see. We've got a cross on the TDI, perfect on the CCI, so let's sell at the top obviously. Got 8 seconds left, 5 seconds on this candle.
There's nothing incompatible crypto in our securities laws.
And we've got a kick down on the 5 minute time frame as well, which I like to see. Just creeping up into the right zone. This is good. Right at the top there. Nice push up. Beautiful. Look at that. Ooh, very nice. We're just going to get some sells in on this. It's going to reject.
The head of the SEC, Mr. Gensler, he's been very busy the last couple weeks there with Bloomberg Technology. Great to see that interview yesterday. What I would respectfully suggest is many people that have been looking for regulators to step in have been saying what took so long, and just in the last couple weeks it has been a very active SEC. Briefing us this morning on crypto, on Bitcoin, but a really twisted view on a California bank is Katie Greifeld, who's on top of this story. For those addicted to the story,
so if it's to push down, already in profit.
I had a Christmas Club account at Silvergate Bank in the early 1990s.
Okay.
I got a toaster. You know, they sent me the toaster and the whole thing. Silvergate Bank, am I right? It's a real bank?
It's a real bank. It's been operating as a bank since 1996. Looking at the terminal, it has over 300
See if it's going to push
employees.
down, let's break that level. To watch these.
So
So if they both see, I love it when both CCIs are above on the 1 and the 5. This is a good indication we're going to get a sell. 1 minute with the cross down there. Say we're 20, 30, about $50, $60 in profit at the moment. We're just going to hold, wait. The zone's disappeared on the 1 minute.
Over 300%, and they were known as the crypto banks.
So Lisa, what this means?
Let's put 3 trades in, 3 positions in on this.
They say, give me your crypto. I mean, is that?
I haven't gotten past the toaster and the Christmas Club that you're talking about.
It
I'm
was
not
very
sure that I understand.
successful.
And then, of course,
This is
Katie's
banking for
fantastic,
time and place.
fantastic response. Okay. So I am curious, though, this sort of take us to where we are now, which is a massive plunge in the shares, a going concern, of fear that they don't necessarily have the capital that they need to fulfill all of their obligations. Is this just the first shoe or the second or the third shoe to drop in a process that is others, or is this just basically one of the main contenders that hadn't seen the massive losses yet to date since what we've seen?
I've lost count of the different shoes, but I will definitely say that it's a
Still
shoe
holding,
and it's a
of course.
surprise shoe, because again, this is
Just loading up my chart for NAS as well.
It's been in business for decades, but how we got to today gets back to that pitch that it made to those crypto companies that basically we'll take your deposits, we'll hold them for you, we'll do traditional banking stuff with them. And they had clients such as Gemini, such as FTX.
Still pushing higher.
After FTX,
I have to interrupt. They
Yeah.
didn't hold crypto, they hold cash, like a normal.
yeah.
That's nice.
So when you go to a crypto exchange, when you go to an FTX or
So if it's to pop
Forex,
back
what
in,
you
we'll
did
put
is
some more
you
sells
give
in.
them your money, and then they would have to do something with the money. So they would give it to a Silvergate, for example, to hold those deposits. And when FTX went under, you had this crisis of confidence, and Silvergate basically had the equivalent of a bank run. You had all these clients trying to pull their money out at once, and that was extremely damaging for Silvergate. And the news this week, why they plunged 58% yesterday, basically was because they weren't able to file their 10K, and their reason was they still
watching the 1 minute
to assess the damage to their finances.
The money question here to Robert McTeer, and I believe 40 years ago when the S&L crisis was a tangible thing that we all trusted. We literally woke up every day. 8 banks in Maryland, or will it be 6 banks in Texas? Are there other Silvergates with crypto?
There is Signature Bank, for example, was another big crypto
nice
bank,
top
but
and tail,
really,
look at that.
It was Silvergate. I mean, I can't stress enough, this was the
nice little bit of a
bank
false
if you wanted to
breakout.
go to a pretty much reputable
Got across on the TDI, we're inside on the CCI, 5 minutes coming down as well. It's all looking good.
To see them go under, really not under, of course. They're still evaluating whether they can remain in business, but it was surprising.
For people who aren't necessarily in the crypto market, who've been watching on the peripheries and trying to understand what this means in terms of froth being taken out of the system, new asset classes, the regulation that might come up, what's been the takeaway so far? We're
nearly 30 minutes before the open.
Another shoe among the myriad shoes to drop.
It was surprising to me that this actually did rattle the price of Bitcoin, because that was one of the big narratives around November when FTX. You
can see we've got a zone on the 5 minute and on the 1 minute.
Look at Bitcoin today.
Have a look there. There you go, just forming.
So you can see it plunged really steeply overnight. And
this is what I like to see, it coming back down to the channel like it did here, look. And then you had the cross on the TDI, and that was a nice sell. And then we had a kind of a minor buy. We didn't do anything here, and now we're waiting for the sell again on here. So we're just in early on the 5 minute. If you're looking, we need to be waiting idea for that candle to come back into our zone here. Just going to get that line. And we're 20, 30, 40 again. It's about $60, $70 in profit at the moment. Just going to see if it's going to break this line. If not, I'll end the trade and get out on this one.
If you think about the
I'll
problem
wait for the next break.
Crypto and Bitcoin was trying to solve initially, it was exactly that, a more efficient way to send payments cross-border without having to pay high fees, etc. How close we
just
are
look what's happening on the 1 minute. You can see they look just rejected off that support.
I would say you're
but we've still got a nice cross just appeared on the TDI. Yeah, breaking down now, look.
MicroStrategy, for example, but in terms of the investment,
just see if we can pull $100 on this trade.
Asset managers who say, you know, maybe it's a 1% allocation, but it's not 10%.
It's going to range around a little bit, but just going to hold.
Speaking yesterday to Bloomberg Technology, today seems to be a watershed where other banking institutions, banking regulators step in. I mean, that's what happened in the early 80s with the S&L crisis, is the adults showed up to shut down banks. Is this the day where the adults show up in crypto banking?
The adults would tell you that they've been trying to show up. If we think back to January, you had the Fed, you had the FDIC, you also had the OCC warning that basically banks should be very careful about how they handle crypto.
We just had a run on the bank, and it's a one. I mean, Jimmy Stewart's not involved.
I mean, this is the whole conversation around regulation and crypto, is that where have regulators been? They've been very behind. I mean, it moves so quickly. It's been
excellent. There you go. It's breaking that level now.
The conversation that we're having around Silvergate, I think, will light perhaps another.
Brilliant. And our TP was hit there. Fantastic. And we got we got $142 there. $142.50. Three positions a take on that. I'm just going to post that into the group so everyone can see on my live account. And
audited amount of cash
that's
held at a custodian. Is that where we're moving? And is that where
so it was a nice pre-market trade.
Where I spent a lot of brain power thinking about, because it is the crypto industry's safe haven asset. It's like the treasury of the crypto industry, really.
That's what you got to do. Conviction, confidence that we're going to get a little kickback. Doesn't matter what happens after this now. We'll go again. We had a rejection, but we're going to go again. Now we've traded the 1 minute, you see, now you can flip over to the 5 minute. If we get the cross on the TD on the 5 minute, then we're coming down again. And the ideal situation is always when the CCIs are both above or below in the same direction. You know, you're probably going to get a bit of a range but the overall trend is going to be to the down.
Well, that's what I do it for.
They're out and about.
So that was nice. I just set my TPs there, which you can preset at 9 pips per trade there. So
that correlation has come a little bit undone in the last few weeks because crypto has all these idiosyncratic issues. But
got 20 seconds left on the 1 minute. Let's see where this finishes. We're still coming down. Going to get a nice cross, so we're going to go in again on here, I think. Just let that push up.
I'm as guilty of this as anybody. To me, it's
Put another 3 positions in.
You know, fossils like me are going, are you kidding me, Miss Greifeld? Forget about it. But the answer is a lot of people are either in this or affected by it or believe it.
There was one venture capitalist who said to me about why he supports certain crypto assets, and he was saying, you know, if you spend time in a third world country or somewhere where the currency doesn't have necessarily any stability, the idea of having some internationally accepted exchange is appealing. The question
Just going to let that range around a little bit. It's going to look like it's going to close up on the 5. You can see there, looks looking good. But we'll just wait and see.
Isn't going to necessarily have that friction and that cost. Theoretically, if the price were to stay the same, it has a purpose that makes sense. The question is how it's being executed and some of the creativity, financial creativity that came up around it, and outright fraud has muddied the water.
We're going to see on that. Certainly that's been a focus, I think, of Ken Rogoff and the Curse of Cash, and frankly the research work at BIS as well, on the efficacy to some really challenged financial systems worldwide. Not challenged is the equity market. Futures up.
I just grabbed some over the screen there. I just grabbed 3 trades on pound against the dollar. That was just a cheeky $20. I'll just post that in the group so they can see that as well. I just saw that move on my over screen. Always a bit cautious before the open. Like I say, we've got trades running on US 30 sell. Yeah, see, we had the rejection. We knew the CCI is going to push up. What you got to do is not be scared. You know it's going to come up because it's on a 1 minute time frame. It's the bigger picture we're looking at here. That we're in the right zone for a sell, for a push down. This is just the usual half-an-hour manipulation. And what I'm tempted to do is actually put some more in at the top here.
Pandemic deals that, you know, particularly in New York City where rents actually fell really sharply in that first year of the pandemic.
Always best where you can. So there's nothing truer than the old saying, you know, sell at the top, buy at the bottom. That's it. If you know you're looking for a sell, then why do you want to be selling on a red candle? You want to be selling on a green candle. If you're convinced it's going to come back, sell at the high. And same when buying, I always try, and if I'm 100% looking for a buy position, I will buy on a red candle. I'll buy at the lowest point I think. And then once I get to my 8, 9, 10 pips, I'm done. I'm out. I'm not bothered if it goes for 1,000 pips or whatever. The whole idea of true scalping is getting in and getting out and reloading for your next trades. So we've taken 1, 2, 3, 4, 5, 6 trades so far, and we're up 154.73 cents. That's not bad. Let's see what's going to happen with this on US 30 now. We're just about to come into the half an hour before. We always get a nice bit of manipulation 30 minutes before. 40 seconds to go. Let's just see.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier.
We've got this nice resistance it's trying to break out of. TDI on both 1 minute and 5 minute now, all synced as you can see, look. Which is good, gives me confidence of which way I want to trade. It's not always a guarantee, of course, as we know, but you got to make your decision which way you think you're going to want to go, and then obviously stick to the strategy.
Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
There's usual 2 p.m. manipulation. It's lovely. That's going to catch people out, I think. Let's see.
Positive by about 0.5%, inching towards a week of gains. The countdown to the open starts right now.
But people are going to start taking profit, as you know.
To get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
And we're looking, everything's lined up. So you can see the dot top out.
The Fed wants to know if strong economic data is signal or noise. President Biden welcoming Chancellor Schultz to the White House, and Citigroup trimming jobs across the investment bank. We begin with the big issue. Will February confirm the January boom?
We're certainly all beholden to the data at this point.
That blurry of February data, that the proof is going to be in the pudding.
January and through the first and through most of February as well, you got data that was, incredibly U.S. centric and strong.
The data was still pretty strong.
Some of the data has come in a bit stronger in recent weeks. We're in a very abnormal situation right now.
The economy does look hot.
A bit too hot to ignore.
We've really just got to see this through, get the latest data trends coming in.
The data, I think, will be mixed going forward. It's not going to be one-sided. The data should be mixed.
Joining us now to discuss TD.
Have that drop, and I've got a nice profit on 3 of my trades at the moment. We're just waiting here, just holding, not moving. Even if it goes against me, I'm not going to end my trades, not when you're 30 minutes away from the open. That's always a bad mistake if you're convinced which way things are going to go. There's your new resistance level, got a dip down, slight curl up on the 5, but this could change that.
That's very data dependent, is going to continue to hike and then stay restrictive until we see that slowdown in the economy. So I think owning 10s is a way to position for that hard landing. I think duration risk is more attractive than credit risk, equity risk. So I think you're supposed to start to leg in, it's 4.9 or 4.09. The peak, I don't know, but I think getting in that 4% range, this is very attractive because the Fed's going to have to cut rates next year when inflation gets closer to 2% and the unemployment rate, starts to move higher towards 5%.
In the near term,
Very true.
is on a similar page. This is what Sabahat Rajapra and the team said over at SocGen just last night. They said the upside risk to upcoming payrolls and inflation prints are already in the price. As we continue to believe the risks are asymmetrically skewed towards lower yields if the data disappoints. Jim Caron, do you agree?
I'm a bit more in the middle on this whole thing. So my view has been that the Fed funds rate goes to about 5.25%, and that a 4% 10-year yield is about right for this type of an environment. And give me 25 basis points on either side of that. So whether it's 3.75 or 4.25%, I think we're going to stay within that overall range. And the other thing is that I guess I am not in the hard landing camp. I do, though, think that inflation is going to come down. I think that we are on a trajectory. But, John, what we have to recognize is that in the first quarter of this year, January and February, we're having an abnormally warm winter. So a lot of the demand and a lot of the good data that we've seen is really warm weather and lower energy prices, and that's pulling demand forward. So for all
Very true.
pressures in markets today in terms of economic,
The guy talks sense.
that might be stealing from the second quarter, and we might see some give
Still
back,
pushing up.
and you might even see some seasonal adjustment factors start to really reveal that going forward. So I am in the camp that
If it goes up again, I'm going to put some more cells in at the top there.
moderate to lower inflation by the end of the year.
Let's just see if this curls up.
January boom is sustainable.
I don't think the pace of the January boom is sustainable, and I think there's a
Popped
lot
up
of
again as another resistance zone.
and I don't know if it's going to be repeatable going into the future. What we know is that inflation's coming down. It may not be coming down as fast as we'd like it to come down at this point, but it's headed in that direction. Just the year-over-year base effects of comparables, all of those different factors, that's pushing it down.
Mike Apen of BFA just publishing says we're all data dependent. We are. Goes on to say
Yep.
that the data dependent Fed will stick to a 25 basis point hiking pace and refers to this re-acceleration.
Nice cross on the 1 minute on the TDI, as you can see. Look, just here.
Now, Priya, would you phrase it the following way as well? Is that how you would
And still got a gap on the 5, but still it's in the right area where you want it to be.
Sure if if it's a reacceleration, I think the economy is
I will only sell when both these are at the top and we've got them in the red zone. I will only buy when we're at the bottom. That's, you know, and regardless of the fundamentals as well. You need things to line up in the right position and then just hold. This is what we're doing now.
The Fed funds rate crossed 4% in December. So,
Putting some nice reverse hammers there, look, on the 1 minute. 5 minutes trying to do the same.
Have been north of 1% only in the last couple of months. So I think it just takes a while. But I'm concerned that
we've got 25 minutes to go till the open,
is going to look at the data,
and then we're going to be on the news.
There were seasonal issues. We had the COLA adjustment in Jan. Personal disposable income went up. It's not clear the data is going to be that weak, or the February data will be that weak. So does the Fed look at that and say we have to keep going? I do think they stay in these 25 basis point increments because we're nearing the end. Whether it's 5.25% or 6%, we're somewhere in that range. I think they go 25, but if they don't see a slowdown in growth and inflation, I think they could keep going well into July, potentially September, and make policy a lot more restrictive. I think the economy needs time, not more hikes. But I think we just don't know, which is why the Fed's going to keep going.
Priya, why do you think the market moved so much on the Bostic comments yesterday from the Atlanta Fed president? When he was asked about a pause, he said this: I would expect that we would be in a position by the middle of the summer, late summer, we'll have to see sort of where things are. That was Bostic's language yesterday. Priya, from your perspective, when you look at the forward curve, when you look at what we're pricing for this Fed, we peak in September. A Fed speaker coming out and saying, I hope to peak in late summer, isn't news, is it?
Well, and I would agree. I think it's not news because they all have the capital.
Going to range around a little bit, you see, so we're loaded up and ready. That's the best way to be.
We have to revise that terminal rate. But I think the market was revising that terminal rate higher. And the Fed is saying, well, not so fast. I think they don't want to extrapolate from one data point. The market was clearly extrapolating from one data point. We pushed out cuts significantly, both timing as well as magnitude. So I think the market said, okay, Fed's not overreacting. Maybe we do stop at 5.5, and that was already priced in. So, I think we have to figure out the economic outlook and the reaction function. I would say the economic outlook is a little more important, but the market was running away with this data-dependent reaction function that the Fed would potentially keep going until a hard landing. So that's why I think that message is interesting, and it's not just President Bostic. I think from even some of the hawks, we haven't heard a 6%. We haven't heard, well, maybe we have to keep going until 7%. We're still hearing this 5 to 5. That December dot plot, even though Chair Powell's tried to de-emphasize it in the February meeting, I think it's still their baseline up until the March.
It's going to hit that heavy resistance, and we're going to load some more sales in. It's going to be good on the open.
And then we really have to wait and see how
We've got 20 minutes to go.
Let's get to Mike McKee on this. Mike, you've been following it all. Chairman Powell speaks next week, and he's got one more data point to have a look at before he gets there.
Yes, and that comes a little bit later today, the ISM services number. The interesting thing is that the dot plot in December, there were 7 Fed officials who were in the 5.5 camp and 9 in the 5.12 camp, basically. So it wouldn't take much to move the dots higher. And it looks like some people are starting to lean that direction. It wasn't the pause comment that mattered from Raphael Bostic yesterday. It was him saying there is a case to be made that we need to go higher. And he talked about the data that we've seen: jobs, inflation, consumer spending, labor markets. And then Chris Waller said we could maybe stop at 5.25 if the data start to go the other direction, but if not, then we're going to have to raise the policy target rate. So they're still somewhat data dependent. We do have data coming up between now and the Fed meeting that will make a big difference. Obviously, Jay Powell testifying next week will matter to the markets, but it's the jobs report and the CPI that are going to really form the Fed's opinion on whether they need to go above 5.25 to 5.5 or more, and whether or not they need to go 25 or 50. You mentioned the ISM services number. It was almost more that than the jobs report last time that really spooked the markets. And Neil Kashkari this week said that's what he's watching, not seeing signs of the interest rate increases slowing down the services sector, and that's what's concerning to him. Well, the forecast is we see a tiny little bit of slowdown today, but remember what happened last time. We went from 49.2 to 55.2. That freaked everybody out. Prices paid went up. And so we're going to be watching this number closely. Stay tuned. Top of the hour.
Looking forward to it. A breakdown with Mike McKee, Guy Johnson, Alex Steele.
Nice rejection candle on the 1 minute look, as you can see.
That Mike just referred to. It's important.
Got a nice cross down.
50 minutes time. On to next week. Chairman Powell speaks. Then on to March 10th. The payrolls report. March 14th. CPI. FOMC meets.
Oh yeah, there we go.
Now, Jim Karen, when we
That's everything. I want to just screenshot that.
got a more complete picture of the economic data. Where are you?
That's for next week.
I think they're going to hike 5 1/4. Look, I mean, one of the things that Mike just said is go back to December. What the Fed told us is that 5.5% policy rates in terms of the dot plot is where a lot of people thought we were going. The market said, we don't believe you. They took the terminal rate down to 4.90. Then we have February, and we have January data coming out in February, and the market say, oh, mistake. Now we have to bring up the terminal rate, price in the terminal rate going up to 5.5%. The Fed has been remarkably consistent in their messaging since December.
Let's just have a look where we are. So yeah, and you can see DAX is pretty much the same from the open, from the PMIs, Euro PMIs.
Yes, I know there has been some other data that's come out, but they still
so very much synced today. Now we're heading to this heavy resistance zone where we can pop a few more cells in and see if we're going to get back to this 3302 level. So
outcomes and what we should be doing. We've had 2 years worth of price action in 2 months. 2 years worth of economic narratives in 2 months. And I think James Anthony of Aberdeen came on this program about a month ago and referred to
if we're shorting now, I'd be like that.
one thing to the next, back and forth, back and forth. Jim, one thing stuck though, with me and others coming into 23. We were told bonds were back, 60-40 was back, those risk mitigation characteristics would return. And all I've seen is bonds and stocks fall and rise together. When's that going to break?
Well, that's the problem right now. We are in a high correlation.
5 minute coming back into the zone again. No cross yet on the TDI. So CCI always leads the way, gives me an indication that there might be a reversal, and then I wait for the TDI to confirm it, and that's how I do it. And then obviously look on price action, where price is. That's the most important thing. And any signs of reversing candles, inverse hammers, morning stars, all that kind of thing. Like here, look, you know, you can just see where push down, rejection, we're going higher. Across, we break, rejection, we're going higher. Now we'll look for another rejection. Like I say, this could all be great on the open, just to see this, just to see if we do get this kind of move back down to this level here, our blue zone.
The sectors, the defensive sectors right now are down. Utilities clearly more duration sensitive. Healthcare, but healthcare is also down. Other sectors, whether we look at materials, technology, or consumer discretionary, those are your highest performing sectors of the market. You have 14%, 12%, and 7%.
And if it all pays off, then we're done. And that is the end of our trading week.
I think that they're anticipating decent growth and a soft landing.
Not just here, but in Europe too. Look at the banks here today, up more than 20% in the Eurozone. Priya, we were told fixed income's back. I get it. Income's back. Real yield is back. I understand that. I want to understand also, though, Priya, from your perspective.
Let's look on the 1 minute.
Correlated returns in fixed income. Are they back?
We can flip this to NAS now and have a look on NAS, or even gold.
Correlations are high, but I think you have to be nimble. This is a market, to your point, the narrative shifts. We're so used to forward guidance from the Fed, and that's gone. And the Fed
See on the 1 minute again, very similar. Big curve, big push up. And again on the 1 minute we had, this is where you might have put some cells in here or here, and you just see yourself get wiped out on that. That's why I always check with the 5 minute as well, and where there was a cell there on the 1 minute, you'd see that the 5 minute was in the opposite direction. So I'd say when the two sync together, that's when it's good to go. You can see here we've got a nice reversal coming on NAS. Again, just looking for that magic 10 pips ideally. 4, 5, 6, 7, 10 down to here. So NAS is looking good. Everything has been going so high all day that I'm literally just waiting to pull the trigger on more sales.
Looks like we're pricing in for that ISM. Good morning, guys. Morning, Roy.
Good morning, sir. Good morning. Beautiful. Glad to have you on board.
Absolutely. It's good
It's
to be
nice,
here.
nice to be back.
Yes, sir.
But I think you're right. This is all pricing in the ISM.
Yep.
Household sector starts to respond to tighter financial conditions, but it still could
Yes, sir.
so I think
It's going to be interesting to see what we get, what moves we get. If we're going to get a nice push down on everything, reclaim all this, take that profit.
0.6%. Let's get you some movers into that open. Here's Katie Greifeld.
John, let's start with Chip.
Plus, we're overbought for the open. I'm looking for definitely a stop loss hunt from this little rise up.
I think you're right.
That's right. Let's go ahead and get ready for that.
Just wait for that nice cross on the TDI here. Look.
You can see that's dragging down shares to the tune of 11% or so, even though the fourth quarter numbers weren't so bad. On a brighter note,
I like it how it just gives you a heads up. It never means it's going to happen, but at least it gives you, it makes your decision as a trader easier because you know which way you want to be looking. You know.
Absolutely. I like seeing those crosses whenever they're inside the volatility bands. And as anybody knows, the shark out of water is not really a trading strategy, but here's the caveat to that. The shark out of water is great if you're in a trade and that MA crosses outside of those volatility bands, it's time to get out of it because it's losing its gas.
Yeah.
That conversation up next.
A lot of people try to trade it the old way, shark out of water. Good luck in today's markets.
No, you can't do that. Yeah, so I'll wait for it to cross, like you say, in the bands outside ideally. The closer it is to that center band, the less conviction it is it's going to happen.
Yep.
Starting to see a nice little pullback now. Look, I'm going to put a push up again now before the open. 10 minutes to go. 10 minutes to go, and then we've got 30 minutes to the first global S&P. PMIs at 50. Expected to be positive, you see, 50 and 50. So that should push things down. If it's higher, let's hope it's higher.
Yeah.
And then ISM is gate 50, and employment, and PMI 54. So again, one's higher, one's slightly lower. So non-manufacturing. So that's going to be interesting to see if that is higher. You know, and then pushes things down. So I've got some trades open on the sales at the moment. I'm just in profit on 3, down, draw down on another 3.
I'm in profit on my NAS sales.
Yeah, it's looking good. And that should come back to that 12.085.
Yeah, somewhere between there and 078 is what I'm looking at.
Yeah.
Plus we're in the last leg of the M.
So it could be just above that 50 moving average, look, which is 12.72.
092. 072.
Yeah. 072.
It's a little different on my broker.
That's the thing, innit? You've got to go with the pattern, because the numbers, exact numbers, never tie up with brokers. But
exactly,
the direction is the direction.
Yeah. The patterns are the patterns.
Yeah, that's it. Otherwise, you'd never use TradingView. You just trade on your broker. But see the kick down on the TDI.
I'm sure the leaders will discuss their recent engagements with Ukrainian officials, including the president.
And yeah, we're coming into some good profit now.
Yeah. I've got my broker and my MT4 terminal set up on an 86-inch TV in the living room now.
Yeah, I saw it. That's brilliant.
Yep. It's been working out well. The wife thinks it's a little overkill, but
you can't miss those trades. It should have been 100. 100 would have been more impressive.
Yeah, that 100 would have been as big as the wall.
Oh, brilliant. Let's see if it's going to push down and hit my TP on the first. My last 3 sell, first 3 sells.
Yeah, it created that supply zone up there between 12.129, 12.133 area. Perfect. Just short term, low quality, but good confluence.
First, when it comes to defense, what the Ukrainians are saying is that they need more ammunition. And Olaf Scholz, he's been to Qatar and Brazil trying to get some ammunition.
10 minutes to
there.
go.
Also working with European leaders on this potential ammunition pact where they would procure it together. That is going to be discussed.
Again, why is it pushing up? Just look to the 1 minute. You can see where it's pushing up. CCI is coming back out again. We're below. We're low outside the bands, so you expect it to push up. But look on the 5 minute. The overall trend is a pullback. So this is why you don't panic. The bigger direction is coming down. This is just a minor pullback. So this is where I would like to, I'd enter more sales at the end of this candle and then catch some trades coming down to that 33088 as it's pushing back down again now.
Looking left, we've got a resistance, possibly support around 12060. Just heads up.
Anne-Marie, one of the best MH down in Washington. Looking forward to your coverage a little bit later this afternoon on this. Germany and the United States and that relationship.
I'd like to see that. You got a demand zone between 12060 and 1270.
Yeah.
That area.
Just looking at it now. There you go. You can see.
Unbelievable, unthinkable. Even 6 months ago. The German 10-year, 12 months ago. Here was the low of the last 12 months. It was March 4th. So let's call it a year ago. We had a negative yield on a German 10-year. Right now, 270. The front
Again, NAS and US 30 both synced perfectly.
12 months ago. And now we're in at around 3. In Israel, what's amazing to me is not that
They've been hit and miss on their correlation here lately, though. Want to be a little laggy, want to be a little ahead.
Yeah.
I think not a whole lot longer. Also because we're going to have
Got a nice cross here, look.
Now, I don't think the ECB is done. I think they have to go 50 in March, another 50, and potentially a couple more 25s. So there's still room to go. Well, we talk about lags in the US. You have a similar sort of a lag situation in Europe, and policy has just, I would say, maybe even
I'm going to get that.
accommodative or just around.
So
it's just
There we go. That's 3 TPs just hit. Just got the alert on US 30. We've got 37, 41, and 37. So that's nice. Nice pre-market trading on those 3. We've got some more already lined up.
It's right for that to have come off. But whether bonds can get to 4% or even 3.5, I think, the economy at some point is going to struggle. We don't have the same savings buffer that we
So my TP is 9 pips.
So I do think it's going
90 points.
the periphery as well as close.
Jim, higher rates are good for banks until they're not, until they're a problem. Jim, I'm looking at Eurozone banks here today up more than 22%. Is there a point in your mind when high rates start to
Bring that stop loss down to about here, look and see.
Of course, look, I mean, at some point,
On NAS.
we're going to curtail growth, and we're already seeing some decline in loan demands. It's
That's
of lending,
18 pips possible.
Look, I don't think we're there because there are 3 factors that surprised us to the upside of the market, was just unaware of in Europe. Number 1, warmer weather.
Let's see if it's going to push down anymore.
Energy prices, as Priya was mentioning, energy was supportive.
Check back on the dirty 30.
Is China.
And again, same result, pushing down nicely. Look now. Coming off that top. People taking profit before the open, because obviously a lot of people will be assuming this is just going to rocket to the moon when it opens. It might not. It might go the opposite way, as we think.
Is some of the geopolitical tensions that are going through, which is why the U.S. is meeting with European officials.
No, we're showing overbought.
Sort out how China and Russia.
I like it for a push down on open. 6
Yeah.
minutes.
But remember, Europe needs the help right now, and they're getting a big boost from China too. So it's not an easy discussion for the U.S. and Europe to have because of the tail.
Look at the spike down nicely on all of it.
So we shouldn't lose sight of that.
I mean, we've been buying since London. We broke our Asian session range on London.
12.023. Yeah, 12.023 on NAS. That's where it broke, and then retested, and then that's where you should have put your buy in. At the same time, you got a nice cross on the TDI at the end of that, and you could have just waited for the CCI to come back to the level here, and you could have got in at here. Look. Yeah, steady crossed over on there. That's reaching the bottom. But again, the kind of all the indicators disappear from your kind of mindset when you're trading the open, because you're looking at price action and what's happened in the session before, which, as we know, has been this nice little W, as you can see, look, on US 30,
the open,
which started at lunchtime. Look at that, the UK, and then we had that center leg, just drawing it on the 1 minute, look, so you can see, and then we had the double bottom, and then a nice second leg. So we could be coming down before we shoot up, before we come down again. But how that we might come down to here on the open, you see. And that's just on the 1 minute, so you can take that as a little bit of analysis on the 1 minute. But for the 5 minute, it really has just been one continuous push, like Justin said. So we'll see if there's going to be some liquidity grabbing, because all this has happened kind of pre-market for most people, so people will just try and jump on that bandwagon of buying.
Back to grab stops for sure, especially after this 30-minute push up.
I'll watch US 30 if you're watching NAS.
Yep, I'm on NAS right now.
There it is.
Got it on the big screen.
Yeah, it's looking good. I might stick one sell in now on this. Let's have a look. What can we do? There you go. Stick a couple of sells in.
Coming up on this program, BlackRock's Tony DeSpirito recommending energy and healthcare stocks to overcome inflation and recession risk. That conversation next.
I got a feeling this is going to be a wild open though.
Yeah, and then a wild news as well.
Absolutely. I'm getting my trigger ready.
Yeah. 9 trades taken so far, 9 wins, so it's a good start.
6,600 pips up for the morning.
Brilliant.
Or 6,600 points.
Over 3 trades are now coming into profit on the sales.
Minute 45 to open.
There we go. Just take this line out. Good luck everybody if you're trading alongside us. Obviously for fun, no financial advice given or received.
For informational and educational purposes only.
Yes.
And should a lot of good investors who learn how to be an art conservator as well.
Yeah, we've got 1 minute 10 seconds to go. I'm just popping into profit again. Let's see, I had 6 positions open. I had 9 positions open, got 6 now. Let's see which way we're going to fly. Now if it goes up and we hit that heavy resistance zone, I'll pop another 3 in, no more than that. And then let's see it pull back. But like I say, I'm on the edge here. That's going to kind of touch that 50 moving average in the middle, come down, retest that. I'll just stick on the 5 minute and watch. It's easier to stick on the 5 and watch and use the 1 minute for reversals, otherwise you can get confused. It's easy to go, oh my god, I've missed the move, or I've gone the wrong way on the 1 minute. Stick to the 5, wait for a move, place your bids. Like I say, I'd usually add some more in, but because I'm already in, I'm in on US, on NAS as well. Here we go. We're in profit on 6 trades now already. 10 seconds to go. Good luck everybody. Let's see if I can clear all 9 trades out.
Nice volatility.
Beautiful push up. Look at that market grab. Just hold, hold, hold. Red, red, red. Green, green, green. Excellent. TP's hit. Brilliant. And we're almost out. I've got one trade open now. I've just cleared that now. Brilliant. Perfect open. We got 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, all green and all done in 30 seconds. So, and that's put me up $689 for the day. There you go. And it's all about trusting that analysis. There we go. I'm just going to post these results so everyone can see. 30 seconds that took for them to hit TP. And that was NAS and US 30. Look at that, just as we said, that nice rejection. Perfect. It's all about having the confidence and the conviction. So look at NAS, look exactly the same, pushing down. Where everyone else was buying, we were selling.
We've seen some weakness in what I'll call big ticket discretionary items. I'm not an economist, but I think it's a combination
so sells
and the concerns out there as well.
On NAS and US 30, as we said. Doesn't always play out like that, but it's nice when it does.
2.3% at the moment. Let's get specific on some of those numbers. You had seen
So it's 18 trades taken, 18 wins.
I got 10 knocked out on the open for about $4 grand. Beautiful.
Since April 2020. That was a long time ago, and that was below analyst estimates of about 5.3%.
Huh?
What's interesting is that you still
Was it?
had sales rise,
Okay.
even though the average consumer spend has completely stalled out. That metric, it's been
So 18 out of 18 winners, pre and post. So, and now we wait for the news. You can see on 1 minute, look at that drop. So you could have got into that first candle, but you're looking at the CCI and the TDI, might have been put off. You see, that's why I try and just stick for the opens, looking at the 5 minute, so I don't confuse the hell out of myself. I knew what I wanted to see, and I just had to hold. You got a little bit of manipulation on the buy that might scare people, but you just hold, and look at that. I said what did I say the TP would be? 50 moving average. 50 moving average. Look at it. That's where it's hit. That's where it's hold on now. Pushing down more.
Airdrop.
It's coming down.
Over the past year, with price cuts attracting new buyers, on the West Coast with more head.
We're looking around 12.090, somewhere around that 50 moving average.
This is all nice liquidity grabbing. Look at that. Let's have a look. We're going to push down any more. We're going to get to another 40 pips. We'll do wait for the news. What we've got the PMIs coming up in 10 minutes. First news. You can see it's just going to hold on that 50 moving average.
A positive data point, and it's actually evidence that the price cuts in that market.
US 30 is going to fill that wick, I think. I'm just going to put another one in.
You'll remember that during the investor day, excuse me, Tom Jew, who's the Tesla head of global production, was asked by analysts.
Brilliant. Yay. And we just got out there. I got another 3 positions. What did I get? 25, 18 and 27. Another 3 winners there. Take us to 21. 21 scalps.
More than 5% on a weekly basis. It's second
Another 3.
weekly decline, but we point out, as we have done
Just on that, I thought it would fill that wick.
at the beginning of this year was such, and the expectations were so high that this was a really seldom.
Now we wait for the news. You'd be tempted to keep going in and out until eventually you get it wrong, and then you'll get burned. So I just thought it would fill that wick. I'm looking at the CCI as well. Look, it's already stretched into oversold territory, and also the TDI is already down there. So it could just range and bounce off here. Look, we're at the support level, perfect, as you can see.
Morning, John. Dell is indeed bucking the trend here. The company posted disappointing outlook, which is why shares are down. They said that
Nice results, bro. Just seen your results. Excellent stuff.
Yes, sir. The slippage has been kicking me here lately. It's taken probably 20 to 25 seconds to enter and close out. which is fine. Where I typically enter, I've got plenty of breathing room in order for it to do that. So, but that's just part of playing the game.
Yeah, I was exactly the same. When I was doing the DAX this morning, it was crazy.
Like, as long as the figures are right, I'll enter early to keep from having major slippage right at open.
That's it. Yeah, it's always that risk at entering before the open. It's very rarely I do, but today was so obvious to me that we were going to get the sells at the open because of all this. I mean,
yeah, it's rejecting.
If we'd
trying to reject that 20 right now.
If we'd been kind of up and down or gone sideways all morning, then you know me guys, I always enter exactly on the open and ride the slippage. But when we've had such a push up on everything, you've got to be looking at going the opposite way. You know, just and look what we're seeing. We're watching this live now. Look at that. You know, and as they're saying everything's higher, we're selling. You know, that's the manipulation. That's the way it works.
Market manipulation. See, it rejected that 20 on the last candle, and it's trying to reject it on this one, but it's reaching for that 50.
Look at that! Look at it messing. Look at that! Yeah. It's a massive flip that was.
Yeah.
As bear market rallies. Tony, why is that what this is?
Well, I think no matter how you slice it, and we've talked about it at BlackRock as a recession foretold, right? We're at 3.4% unemployment. That's the best we've
Yeah, it's reserved. It's bounced off that support.
The economy is running hot. Consumers are
But
drawing down.
we're still in a sell territory.
That means we're late cycle. And then combine that with the fact
Probably waiting for the news now.
has been the most aggressive Fed since in the last 40 years in terms of raising rates in a short period of time. Money supply, M2, is negative year over year for the first time since the Great Depression. And when you get an environment like this, just Fed hiking, 10 out of the last 13 Fed hiking cycles have resulted in a recession.
I wonder if we're going to actually push back down to this 12.050 zone on NAS, where it bounced.
Investors at BlackRock, including in the fund I run, the equity dividend fund. We're very focused on building.
So I'd love to put more sells in now, because that's going to push down again, but I just want to wait for that news.
If we are going to have that recession foretold in the way that you and the team have said so, how rare would it be if October...
You can see was the TP hit, look, as I said, which was 188 points, 18.8 pips.
Good lord, look at that candle.
I know.
Yeah.
But I was good to set that, and it played out nicely, so I'm just going to get rid of that off the chart now. Yeah, look at that rejection. I told you it's going to push down off that high. Damn, I should have sold there at the top of that. Look at the rejection.
That's where my sells were.
Right.
Right up at the top of that supply zone, 12,120s. Look at that.
Look at it rejecting on the 1 minute. Look.
Again, as a stock picker, you need to look for recession resilient earnings and combine that with companies that are trading at reasonable multiples. If you do that in a market where beta is hard to come by, I think you can still generate a lot of alpha. And I think that's going to be the key for this year.
So, Tony, let's start with resilience then. You've mentioned healthcare as a sector. Some people might say this stuff is really difficult to understand. At the moment, I can get 5% on a 6-month T-bill. I can't time the market. I'll take that and I'll wait.
CCI's going back in. Look on the 5 minutes. Just watch out.
Yeah, well, first of all, I think...
And on the 1 minute, you've got the TDI in the wrong place. This is where it all gets mixed. This just tells me we're going sideways for a bit now, because all kind of 4 indicators don't line up at all. So, and we're right in mid-channel, which we want to leave alone. Let's have a look where we are. 5 minutes. That's why we've got 5 minutes to the global PMI services, and consensus is 50.5. Is it going to be higher? Then we'll get more drops. It's going to be lower, way lower, and then we're going to get a push up.
Why? Because we're aging as a society. As we age, we require more
4 minutes.
4 minutes, and then we've got the speeches afterwards later on. Logan, Bostic, Bauman, Barking.
Even in recessions. And then you look at valuations. The valuations are quite reasonable. Healthcare trades at a below market multiple, despite all those great characteristics I just described.
So
it's a great.
Just put this here.
It's only the other side of things as well is energy and financials. When someone hears someone
Put the
talk
line
about the
there.
potential of
So
recession and follow
PMI.
with energy
And we'll have ISM afterwards.
Are we going to trade on growth slowing down, on inflation remaining sticky, or both simultaneously?
Yeah, there are a lot of cross currents right now, and I think that's one of the advantages of trying to stay balanced within your portfolio. And so think about energy.
And again, when it comes to trading the news again, don't look at any indicators. That's the worst thing you can do if you're trying to predict using indicators, you know, like there's some kind of fortune telling device. I've made that mistake many times before. You've got to kind of just have it on price action and the result, and know how the market, and know how the market moves based on the result, or how you think it might move, you know, or you wait until you get the move.
News takes a lot of back testing in order to actually understand it, understand the figures, and figure out how to predict price action.
Well, we've had it with NFP. I had it. We back tested NFP and said if it happens this result, it's going to go that way, and it did, and it went the opposite way. You know, because at the moment it's all about the Fed, it's all about inflation, it's all about interest rate hikes or when there might be a pivot, and that's the only thing that matters. Everything else is irrelevant, really. It's kind of, it's all about that. It's all about second guessing. Is there going to be a interest rate cut this year? Is going to have to wait till next year, or we're going to go higher, you know, and that's why these data points are more important. That's why they're expecting some big moves on this ISM.
US shareholders are buying into those companies, and so we've seen that valuation gap start to narrow this year.
So that was that resistance zone we pulled out. Like that lovely drop.
Yeah, I really wanted to see it tap that short-term supply zone before news, but I don't think we're going to get it.
We're below,
unless it's better than expected.
We're below the 50 moving average, above it on NAS and below it on US 30. So I believe it's just going to go up. It might go up and tap this the 12 12121 zone again.
Yeah.
Tony Smart, as always.
We're getting cross-ups.
Tony DeSpirito there
But
with BlackRock, breaking things down for you. Resilience, look to healthcare, fight inflation, financials, energy.
again, we could be popping sales in on this. When you see, like I said, I agree with you. If it gets into that zone again and rejects,
Only got a minute 46, so I don't see it happening.
On Wall Street.
There's a few areas like in tech and things like that where there's sort of layoffs.
This is just a wild push up on the first news drop, and then it just smashes. It might. It's reaching.
yeah, it's going for it. It's trying. I say it all depends how high it's going to be, or lower. I mean, you know, but it's quite a big jump from last month's 46.8 up to 50, if that is right. Which, if it is that and it wasn't priced in, we should get drops.
Oh, I think you saw the price. I think you saw the price in this morning from London forward.
Yeah. And now we're just going to recoup everything we gained.
Yeah, if that's going to be the drop, you saw the price in this morning.
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of
Yeah, Naz is trying to get up there. Look. And we got 30 seconds to go. 30 seconds on US 30, 30 seconds. Just make sure we're logged in on the brokers. Might go Naz on this one.
DHL is sending a consistent message with its investments. The company spent
10 seconds.
€1 million to upgrade its logistics center at the Cologne Bonn airport, designing it around key strategic goals.
Here we go. Let's see.
It actually shows the big mega trends which formed our strategy 2025, which was
Oh, it is higher. 15. Held nicely, it did. Let me just let this play out.
Sustainability, it's a very
look on NAS.
Everything and digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth the 123 million euros?
PMI.
That you have the right capacity for the growth in the network. And at that time they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity, we need this building. And of course there are always debates, does it really have to cost 123 million euros and so on. But fortunately they convinced us, because then with COVID and the volume surge,
Let's let this play out. Push on up, look at it push. Pushing up. Let's watch that resistance.
Inflation's normalizing, but it's coming down.
I'm going to go
I just think there's going to be a lot more
on the rebound.
resistance to inflation than maybe we'd all want. I'm hearing people still out there pushing.
Tapping the supplies on up there. I don't think that's going to hold.
As the meetings go on this year, we'll see what happens. If
So look at US 30.
maybe we don't go quite as far, but if inflation persists.
US 30 and leave that one alone for the minute. It's going to push up the same and then we should get a rejection. So I just want to have a look on that. We're loaded up. We're loaded up on the sales. Yep. TP's hit on US 30. Brilliant. That was 3 more sells there on that rejection. I got 45, 39 and 43. Brilliant. So that was really, really good. Beat my TP even though I put my TPs on there. Lovely rejection. Lovely rejection. Look at that. Just as we said, good summer, good manipulation. Let's have a look on NAS now.
Like we're seeing over at Goldman Sachs, and even when I pressed Goldman Sachs about further job cuts, they did not quite bite. So what are we looking at Citigroup here? This is another cut that
just holding on NAS.
Less than 1% of the company's workforce. However, of course, these kinds of drip by drip.
So if I have to hold to the next news, I will do. But yeah, look at that. So we had 50.6, so about right. So overall, it was pretty much as predicted, a little bit better. So, which, you know, still means it's holding up well. And now ISM up next.
Of course, that's highly contingent on a lot of things. Nothing going wrong, as well as the rate story starting to stabilize, John. The banks are still stuck with lots of
ISM up next. Last trades of the week. But US 30 delivered really good. I was all quick on US 30 before the rejection. It's doing the same again. Look, I say we've got a curl up and a curl up, so we don't want to be selling at the moment again. I just wanted to catch that quick rejection that I knew would get off the 50, which I did. That was worth 9 pips. We'll go again on US 30 in a minute. Once we get to that news, we're 10 minutes away.
On a 30-year fix, it's
approaching 7%
all over again. Charlie, I just imagine there's a lot of people sitting on their hands, just no business.
Yeah, ISM non-manufacturing is coming out.
Yeah.
Yeah. 5 of them stacked, 10 minutes.
Right now, that structural issue in the market about the mortgage rates. It's
pushing down now.
Housing as well, the shift
that might be your drop.
And the private equity and institutional.
Yeah, you can see on the 1 minute. Look, on the 1 minute, we've got a nice resistance.
Rejection.
Yeah, see our TDI and that was good. So I'm gonna put some more cells in.
I've still got a couple cells running from that anticipation on the news, but
yeah, same here.
Little drawdown. It's all good.
Yeah, got 3 in drawdown and 3 against. Is it going to hit take profit? Yes, yes, yes. Another 3 in the bag.
You got supplies on it rejected off of north of 12,158.
Yeah.
Has spooked this bond market. Today, we get ISM services in about 12 minutes from now. Mike McKee's going to break that down. Mike, this is almost like the appetizer before the big one, right?
Yeah, it's the S&P Global US
plus 9,093.5 pips for the day.
Not bad. Look at that.
And it comes in at 50.6 up from 50.5. So a little more strength, and it doesn't suggest that we fall back.
Yeah, cleared more sells on
The ISM last month was very strong, and there
US
is some hope that it
30.
would come back a little bit. Composite for the S&P Global 50.1.
I've got 2 more sells on US 30 on that.
We got a lot of the services PMIs out today, and
On rejection.
All have in common is they all cross 50. So we are seeing strength in services.
Right, let's go to NAS. Let's have a look.
What happens at 10 o'clock?
US Tech, yeah, it's all pushing in the right direction. Bit of drawdown, but like I say, we're way up on our account today. It's really good. I've got one more going to hit TP in a minute on US 30. I try and end it manually, but it's flashing all over the place. But
particularly the manufacturing one, because it's been around.
Brokers are going to be jammed up right now.
Yeah.
Services numbers just started coming out in the 1990s.
I just ended that.
And they're a little bit different.
What did I get on that one? I ended it manually. Oh, 23.91.
ISM has bigger,
there you go.
more established companies that do business mostly in the United States, whereas the S&P Global has smaller and often more export-oriented producers. So probably the combination of the two gives you an idea of what's going on, but it's the long time series that Wall Street likes about ISM.
You went through the calendar for the next couple of weeks.
Posted those results on there. We're still holding some. Yeah, we're still holding.
If there was a speech written, testimony already for Chairman Powell for next week.
We're gonna, yeah, we've got 4. We're gonna hit TP on US. I mean on NAS now. Got all that. I'm out of US 30. Just on NAS. Can that push up? Tasty. Right, if that's the case, then we're going to go again.
We are absolutely committed to bringing inflation down to 2%. Given the fact that those other big indicators are still out there after he testifies, I think he's going to be.
Look on 5 minute. The 5 minute is kicking down as well now. So this is set good. Remember, sell high, buy low. Simple.
The ISM Services Index, Mike, Alex Steele, Guy Johnson, they're going to break that down for you in about 8 or 9 minutes time. I went through the calendar, I'll repeat the dates for you. Chairman Powell next week, and then it's on to payrolls on Friday.
Yeah.
The following Friday, of course, March 10th. And then March 14th is when we get that next CPI read. And on the 22nd, the Federal Reserve meets to decide where interest rates will be and where they should be. And ultimately, the summary of economic projections comes out too, so we get another round of forecast from the Fed, and that's where potentially the fireworks might be. The broader market right now, 22 minutes into the session, positive 0.5% on the S&P, on the Nasdaq up by 8 or 0.9%. To lift the lid on the index, let's get you some sector price action. Here's Katie.
Hey, John, well, we are looking at a little bit of a rally on the broad index level. Let's break it down and look at what is driving it. You have real estate up on the day, leading the chart.
A bit of a rally now. Let's see.
Communication services,
We're holding because we got the news coming 5 minutes or so.
Like 9 sectors in the green. You look at what isn't doing too well. It's energy off by just a hair, and at the bottom there is consumer staples.
US 30, see, we just caught that nice rejection again off the 50 moving average, so I'm not in any positions on US 30 now. It's all about the NAS. But again, we will trade this when we get the news result. Just want to stretch out my chart here. And again, we're in the right position for a sell on the 1 minute, and it's not on the 5, so I'll leave that up for a minute, wait till it gets this heavy resistance zone here. Look, 33090. And NAS on the other hand is pushing up to that heavy resistance that we said. 12162, and we're going to get a sell off here. Look at that, it's positioned perfectly. Let's see. It's going to hit that resistance now, look. What we're saying on the 1 minute combined, 1 minute and 5, there we go, there's the heavy resistance. It's going to pull back into our zone. Look at that, yeah, it's resistance on both levels, look at that. We're both scooped down. It's gotta be put some more cells in on here. Right. Let's see this play out. Let's just wait and see. News coming, news inbound.
mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there.
US 30 as well, not pushing up, same thing into that heavy resistance, but like I say, I'm out on US 30, I'm just focused on NAS. Looking at the 5 minutes as you can see, and ISM is approaching. Just earmark that. Oh. Hey, ISM, not I am. You can see we're high above. You really want to wait for the CCO to come into the zone before you put a trade in. It's been aggressive if you trade outside it because it can just keep on going. Similar to an RSI. But the TDI is fairly gapped as well. Look, there's a big gap there, so we have got a nice blue zone fall. Let's see if it breaks or holds to that. NAS over 1%.
That is the data point of today. Another round of Fed speak.
There it is.
Logan, Bostic, Bowman, Barkin, all on deck. President Biden greeting German Chancellor Olaf Scholz at the White House this afternoon. Looking to next week is Chairman Powell on Capitol Hill for 2 days of testimony. And finally, we get the US payrolls report next Friday. I can tell you right now, moving target, but in our survey at the moment, the median estimate 200,000, the previous number, as you're well accustomed to right now, 517,000, because we've been talking about that.
Yo guys, if you're a trader out there and you're inconsistent, you're consistently losing money, or you're stuck at breaking.
This is Bloomberg TV.
Here we go. Good luck, everybody. See how this plays out. That's a nice rejection, as you said it would be. Look at that 12 121 56 57 zone. Get a nice curl down. We've just got 6 trades in profit now. Let's just let this play. Can end some manually. 2 minutes to go.
Minute 30.
Yeah, minute 30.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was...
It's saying, here we go, got the countdown, 50.1, 54. Is it going to be like the global? Is it going to be different? Going to be some big spike downs on this. And we might even get TPs before it even announces it. It's floating around.
Pairs of sneakers made every single year. And it was 100% made from plastic and the hides from cows. And it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that
again, just set each position at 99 pips.
Doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
Got 30 seconds to go. Good luck, everybody. Remember, if you are trading this, always use smallest lot sizes, don't over leverage, and even create a separate account just for trading news. That's a good way of doing it. Risk it all, and you're not risking your main account. Done that a few times.
You too?
Yeah. Believe it or not.
All weekend on Bloomberg Television and Radio.
Oh, it's way higher. Look at that. 54 and 55. Boom. Wow. That's caught the whole market out. That has. That's way higher. And we're hitting TPs all over the place. Wow, what a sell-off. Look at this. There is your rejection. There's your ISM. Boom. Look at that, beautiful. And we've already hit some TPs there.
Pepsi's Number Fever campaign
and that took,
has probably gone down in history.
We got 1, 2, 3, 4, 5, 6 positions there done and closed in 23 seconds. On NAS.
The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year.
And they always bail out of reporting it, look, while they try and hold their breath and try and come up with a way to manipulate the news. They always go to an advert. There's ISM, look at it, look. So yeah, it was higher than expected. 54 over 50 and 55 over 54. So yeah, all round that is kind of not what the market wants to see. Look at that, there's a drop. You could have sold US 30. You could have sold NAS. Easy for 10 pips. We've kind of predicted it. When we don't like to predict, we like to kind of wait and see. But again, following price action, there was a good chance it was going to do this, especially when you've been seeing the news results all been way out of kilter. They've all been way off what they've been predicted. Look at that lovely push down. Let's go back to NAS. Again, you can go on the 1 minute and see it. Look at that pushing down, beautiful. Let's just see if we clear any more trades on this. Oh, beautiful, man, beautiful, beautiful. I'm just ending some manually because we're flashing around all over the place. So there's another 1, 2, 3, 4, 5, another 6 trades I took there on NAS, and again ended some manually, but we're talking there in 30 seconds. It was another, you can see the results there, another 8, 6, 7 winners. We're going to get any more last trades. We haven't had a cross on the TDI yet. This is how good you can get with fundamentals. You can get in there before the indicators, which is what it's all about. You know, they're lagging indicators. So let's just see that. That was a hell of a figure. Just going to end these trades manually as they're flicking around all over the place. And we're done. That's it. All my positions are closed, and I got another 1, 2, 3, 4. I got another 10, 25, 30, 40, 50, 60 bucks on that. Again, if you want to do more, feel free. That's totally your decision, not ours. That was another cheeky 4. Again, could have held for a bit more maybe, but we've done more than enough. So all positions closed. Whew, and that's it. We are done. I'm all closed out, and that we took 1, 2, 3, 4, 5, 6, 7, 8, 9, 15, 16, 17 trades on NAS there. 18, 19, 20, 21, 22. 23, 24, 25, 6, 7, 8, 9, 30, 31, 32. So we took 40 positions, 40 trades, and well, we're 100% today. Amazing. All green. So yeah, that's left me a total of $1,602.25, and that is all from well, about 1 hour, 13:54 UK time. I entered the trades. So there you go, 2 hours, hour and 10 minutes. We are done. That's how you scalp the news and the opens teams. So yeah, well happy with that. I'm just going to drag my chart and print all these out so everyone can see the results. Just put them into the trading group. ISM news bagged. Justin has been even more successful than me. We love it, and that is it.
I don't see that sell holding up. We're still going higher.
Yeah, it's
That's
dropping.
not gonna be a direct...
It's looking good.
Yeah, well,
it's going to clear that wick. Look at that's going to clear that wick. I mean, I wouldn't. It's not going to buy until TDI comes down, I think. Bless me.
Bless you.
Ooh.
Yeah. It's probably going to do like.
Oh, sorry.
Yeah, you're good.
Oh.
Characteristics probably going to reject at that 20 again.
Yeah.
If this candle holds through.
It's nice how it cleared the wick out. You see, it's a nice move down, nice push down. If you look on the 1 minute, there you go. The 1 minute, look, it's broke the 50 moving average on the 1 minute. So as soon as you see it break that 50, you've got to be in on a sell, and you've got to come down to that. Look at that. I could have drew me 12,100. Look at that, perfect drop. Could have gone in for more. No FOMO, guys. Take your winnings and enjoy. Just going to give you a flames there, Justin. A flames for the wins. We smashed it, bro. That was a great session. We smashed it. And that's just patience. It's patience. And when the markets go one way for a long period of time, you've got to look for the reversals. I know people hate reverse trading. It's risky and all the rest of it. But it's, to me, it's more dangerous jumping in on a trend when you don't know if that trend's, you know, yeah, it could continue, but there's more than likely it's not going to after it's run a whole session. It doesn't matter whether that's NAS, gold, US 30, SP 500. That's what I'm always thinking in the back of my mind. I'm never the kind of trader who jumps in on trends when they're halfway there. I'm always thinking, I'll just wait for the reversal. It'll come. There's going to be a reverse. The news, if the news goes our way, that's the catalyst for the reversal. And this is what you've seen. As Justin says, look, we've just seen that nice rejection now of 12,100. So we could be going higher, or we could be coming all the way back down to what I said was the 12,055. And so you're still in a sell zone on the TDI, you're still in a sell zone on the CCI, so this is still good. But like I say, you stick to your strategy. I trade the opens, I trade the news, a little bit outside that. Once I'm done, I'm done. That is it. And I don't want to be, I think 40 odd positions is enough in an hour. So and to be 100% today is excellent. Never usually happens. That's all thanks to the news and learning how to trade the manipulation. Like I say, if you want to join us, go to the website www.mohawkforex.com and we'll teach you in the art of trying to do this if this is something that you would like to learn within the team. And you know, we are trying to have a good strike rate, and we've got a good close small group, and you know, we believe in price action, momentum and news-led trading with the help of the indicators in the background. You know, and like Justin said, it's more likely with the TDIs and the CCIs and all that, they help you when you're in a trade. If you're panicking about drawdown and all the rest of it, they help you, if nothing else, to help, you know, say just wait, halve your loss, or, you know, get out of the trade, you know, now, and take whatever loss is in front of you, as much as giving you an entry point. Our entries are always way before the indicators. Like Justin said, we're always kind of try and be ahead of the game and are quite aggressive, and the indicators just back up our entries, but we use them more to see where we should be getting out of a trade.
Yep. Well, Roy, I got to take the wifey to work. It's been a great stream.
I got to take myself to the swimming pool, and enjoy my dinner tonight on that trading session. We will be back next week, obviously, and we'll try and squeeze another live trade in end of session in New York, and then obviously we'll be live trading the good old NFP at the back end of the week. But thanks for joining me, Justin. Enjoy your evening. Thank you everyone for watching. I hope you learned something from it, and remember, stay safe, and see you on the next live stream. Take care, everyone.
Cheers.